Good afternoon, everyone. Hope you guys are doing well. It is Monday morning. We are back to business, looking to get a short pre-market analysis here to you guys, so you guys know what we're looking for and our expectations for this specific session. So we have this down close candle here, bullish order block. We discussed this yesterday in the weekly outlook on YouTube. So this is a level you'll want to have noted as a discount array for us to potentially look to trade into today. Again, keeping in mind the higher time frame is still bullish, right? So shorts should be taken with consideration for the market still being bullish. That meaning take partials quicker if you're bearish, right? Don't over leverage on a short setup when institutional order flow is to the upside, right? However, this could be a discount level for us to look to trade into here today. Hourly time frame, that's that daily order block in here. What has my attention is these smooth, relatively equal lows here and there. So these lows are relatively equal. It'll be interesting to see, do we trade higher, reach for a short-term premium going into 930, reject from this fair value gap, sell off, attack the lows here and here, and dig into that daily bullish order block. That's what I'm favoring as of right now. However, if we just keep trading up through that institutional order flow remains bullish, then that would indicate something entirely different. Let's refine this to the 30-minute chart. What key level am I watching here today? This PDA right here is going to be extremely influential for my trading here this morning. That is the 30-minute fair value gap. Why the 30-minute? The hourly is just too big, and the 15-minute, not a whole lot of inefficiency in here. So the cleanest time frame is the 30-minute. So using this fair value gap here, will be interesting to see how we trade there. Right, and one of the reasons that's going to be a key level as well is because you'll see it also overlaps with the new week opening gap. Right, so we have a convergence of PD arrays there. So you also want to have the new week opening gap on our chart, right? That's going to act as a draw. I would give that to you as the trade of the day, right? The new week opening gap and closing the settlement where we're at right now is 21,624, and the settlement is at 43. So because that's only 20 points, that's not really a valid setup for today, right? Generally, I give you guys the new week opening gap and then the regular trading hours gap as an initial draw for Mondays. However, because that is such a small range, there's not a whole lot of opportunity within that. However, you do want to watch how we trade inside the new week opening gap, more specifically this 30-minute imbalance. If we reject it, show signs of weakness, meaning we stay in the lower portion, we don't close above it, then we can look for the market to trade down. First partial would be mid-wick there. If we accelerate through that, we have the low here formed pre-market, and then the previous day's AM session low if we start to slide from here. So we have these smooth highs here, buy side taken. Would want to see buy side taken, a rejection, if we will get that set up there to the downside. That's all that has my interest this morning, keeping things very light. It is Monday with no news after non-farm payroll. And again, we do have CPI, PPI later in the week. Good evening, everyone. Hope you guys are doing well. Going to do a review of the pre-market analysis and the trade setup that I took this morning that was called live within the community. So I want to break down top down what I was looking at, why I was looking for lower prices, and as always, walking you guys through the routine that I have every single day, which is walking from the higher time frame weekly down to the 1-minute chart using time and price to know what I'm looking for. So with that, let's go ahead and get right into it. Weekly time frame here, we see the NASDAQ traded higher last week. We did not get a retracement TGIF last week. So when that is the case, with Thursday or Friday of the previous week and not giving TGIF, I'll look for that on Monday of the coming week. So I was looking for this level here as a draw going into today's trading. And then what I'm doing is I'm looking for the 20% to 30% retracement of the weekly candle, but that's not enough. I have to have other levels and PD arrays that I would use as a target for the market to want to draw into that. But this sets the bias. So before I even go down into the lower time frames, if I'm bearish, I need one of two things. The market to either trade up into a premium inefficiency or a fair value gap, or for the market to trade above an old high. If it does both, even better. So that sets the bias, that sets the expectation for what I'm going to look for in the lower time frame. Daily chart was using the bullish order block here as a draw. So what I wanted to see going into, Monday going into Tuesday, was how we traded inside this down close, right? Because if we're going to be bullish, as I was saying yesterday in the YouTube weekly outlook, the market should find support inside this wick, inside the upper portion, if it's going to be bullish. So I used that as a target this morning, and then I let the market give me feedback as to what it wants to do for the remainder of the week. Given that we closed down below it, we'll probably look for this fair value gap here going into tomorrow. And if we really start to slide through that, we have this imbalance down here based off how we close below this down close here. So just some targets for the next few days if we continue weak, which is what we're looking like we're getting as of right now. However, use the daily bullish order block as a target, right? As a draw on liquidity. All right, hourly chart. Let's put the midnight open, always looking at the day through the midnight open, power of 3. So we have a consolidation in Asia, which is what we expect. The market then traded higher in London. One of the reasons why I was confident, as you've seen in the pre-market analysis, to look for this low here and here, these relatively equal lows, is because of what the market had already done in London. That's why usually I recommend traders to trade the New York session, because you have a built-in advantage, in my opinion, of seeing what the London session has already done. So we see London traded higher, taking anybody in on a breakout that wants to chase the first run of the week. Bull flag, they send it higher, and then we aggressively break down and shift market structure. So once we took the stops, we broke down, creating a fair value gap. We have equal lows here and here, and as long as we respect that, was looking for lower prices. What you'll see here on the hourly time frame is we have a hourly bearish breaker with a fair value gap. So run on stops, shift in market structure, fair value gap with the bearish breaker, trading up into that, making the high of the morning session, and then aggressively running for the lows here, here, and into that daily fair value gap, overshooting it and stopping just short of these relatively equal lows here, which will likely be the draw to trade into going into tomorrow. All right, 30-minute. This is the level that I liked for the premium array this morning. And by premium array, that simply means the level I want to see the market trade up into, make a high, and start to break down, right? We can anticipate market structure when we know what we're looking for. So I want to see the market trade higher into this 30-minute fair value gap. Why this fair value gap and why not this one? Well, if it's going to be an energetic run lower, I want to see this imbalance here left open, because that indicates to me it's high probability to accelerate and run for the discount levels that I was looking for. Also, we have this new week opening gap here. So we have an overlapping of two key levels, the new week opening gap and this fair value gap here. And you'll see it makes the high right at the new week opening gap with time and price within the opening range. We expect the high of the day to form inside a premium with the bearish bias, right? So this is what sets the tone, or what sets the stage rather, for high probability in the lower time frame. Because if you're looking for bullish patterns or looking to buy this, you're going to struggle a lot if you don't know the bias and that the market is bearish. So when I go into my 1 minute chart, or when you see the 1 minute executions, don't think that's what's giving me the bias. It's how I understand the weekly, daily, hourly, 30-minute, and then how all that comes together to the 15, the 5, and then all the way down to the 1 minute execution when I'm shorting inside the high of the morning session there. So a lot of levels converging here, and that's what you want to look for. For very sensitive levels that you're going to get a reaction from, obviously you need time aligned, but if you also have a convergence of several levels that make sense and that start to agree at a specific level, then that'll give you higher probability for turning points and sensitivity at these key levels. All right, refining it down to the 15-minute. Let's bring this back over here. 9:30, they send it lower into the pre-market lows. That drags anyone in short that's going to chase this, and then they take it higher, they stop them out, and they take it into this premium 30-minute fair value gap. From there, we break down, we get a doji, which is a reversal pattern within the right context. Like if there's a fair value gap that I'm expecting it to trade up into and reject, I'll expect a doji to get created here. So that's how you can anticipate those. And then also we have the wick here. Open, trades higher, couldn't even get to midpoint of that wick, confirming bearishness, all things that are telling me that I'm on side for the market to trade into the AM session, previous day's low, right? So again, it's always time-based liquidity. That's what the market is always going to draw to. So this is the low of the morning session from, I was almost said CPI, from non-farm payroll Friday. And then that was the draw for me. And because it's a Monday with no news, very content with the low-hanging fruit here. I did not try to capture any more of the run, did not trade the PM session. Once I got this nice run here on the AM session on a Monday with no news, Again, very content with enough, not looking to push a whole lot in these days. Ended up being a really nice expansion to the downside and a continuation in the PM. However, once I get paid, I get off the charts, just like I usually share with you guys. How do I keep the mind sharp? I don't dull it by staying on the charts all day long. I get what I'm looking for, get paid, done for the day. However, when I first started trading, I would spend a lot more time on the charts because that's how you get familiar, right? That's how you get good at reading price action. But then you reach certain levels in your trading where now it makes sense to do less, because less is more, especially when you're trading size and you have a lot of volume behind what you're doing, right? Whether it's multiple accounts, multiple prop firms, the bigger you get in your trading, usually the less you're going to want to do. All right, 5-minute time frame. We see they drop it here at 9:30. What that does is that gets people to chase it short, and then they stop them out. Smart money selling up here in that premium inside that 30-minute fair value gap. And again, new week opening gap, right? It's how these levels overlap. Let me take off the 15-minute wick here. So it trades higher, makes a high, and then look at what they leave here. Relatively equal lows here and here. So when they take it higher, that also builds sell side here below the low. So that becomes where the sell stops are from anyone that's buying. So it aggressively trades down into this low here, here, and then dives into that daily bullish order block. Also, you'll see there's a wick here. There's no imbalance, like a fair value gap for me to use. So what I'll use is the wick. So one of the things that also allowed me to trust it is once we close down and left this wick here, this becomes a premium wick. The fact that we couldn't trade the midpoint, get above it, indicating the market is really heavy. Again, still telling me that I'm on side. So as I always say, you want to get up off the 1-minute chart, because if you look at the 1-minute chart, it's a lot of back and forth. It can scare you out of your position, make you not as confident in it, especially if you see these big up close candles on the 1-minute chart. But as long as you reference that information on a 15 and a 5-minute, it helps you understand what's happening. And you can see this is just a little bit of back and forth on the 5-minute, nothing alarming unless you're way too zoomed in on the lower time frame. So you see just naturally retracing up into this wick, staying in the lower portion as we'd want to see, and then aggressively diving for the equal lows. All right, so 9:30 whipsaw, generally not in a hurry to do anything within the first 2 minutes of trading. Like to let the market set up the high of the day with the drawn liquidity that I have. So at 9:30, we get the whipsaw up and down. They take it higher, again, into that 30-minute fair value gap, but also clearing out a high here. So what do we have here? The market trading up into the 30-minute fair value gap that I was expecting to create a high and sell off from, but they also engineered buy side here, even better. So they take it up into that, breaks down. We respect this up close candle here. So as we're leaving that, that's right where I'm selling short. And this should be a PB, propulsion block, because this is the bearish order block here, but this up close candle trades into this one. So as we're trading down here and leaving this range, I'm selling short inside this candle here with the stop just above the high. And then as it breaks down, use a 15-second fair value gap to pyramid, or sorry, a 15-minute bearish order block to pyramid that was also overlapping with the first fair value gap of this session. And what you'll see in my execution videos before we got down into that, I was expecting that to act as inversion, which simply means we get down below it, use it as resistance, and sell off, and you can see just a beautiful price action here. Retraces, stop was just up here. Not fearful of getting stopped out. Why? Because it shouldn't trade through this fair value gap and this up close candle if we're still going to rotate lower and trade into the equal lows that I had called for pre-market. And again, that gray shaded rectangle, which is that daily order block. So we see here, we also have the macro window, right? So we're trading up into buy side, into that 30-minute fair value gap. We get the shift in market structure here, swing low taken out with the fair value gap. I was shorting early because I was anticipating this, so I wanted to get in inside the change in state of delivery here, which is where the market switches from a buy to a sell program. Getting on my short here, pyramiding, and then in the pyramid, I was able to roll the stop. So generally when I pyramid, I only pyramid if I'm able to reduce risk. So essentially I entered here inside the order block anticipating this displacement. Then on the retracement, I'm able to pyramid one more, but I'm able to reduce the risk that I had up here. And then I'm able to shave off about 10 to 11 points of risk after I pyramid. So whenever I'm pyramiding, that's what I'm looking to do. If I can get another strategic entry that's still in a premium, I'll show you why it's a premium in a minute, then I'll pyramid and then reduce risk. And what that'll allow me to do is have very low risk, high reward trades. So if I'm expecting the market to draw down into this daily order block from here, this is where the price run is beginning. This is where I think it's likely to trade down into. So as long as I'm getting an entry above 50% of that range, I'm confident I'm still entering in a premium before we start to expand lower. And what this is the time it spends here that allows smart money to accumulate, right? The order block trades up into it. Look at the bodies stopping right there at 50% of that wick. Perfect delivery. And then it spends time inside the first fair value gap here, hits it once more, nosedives. This allows smart money to accumulate in a premium before it enters what's called the expansion phase. And the expansion phase meaning once it leaves 50% of premium to discount and we break through equilibrium, the market's going to be in a hurry to accelerate. Why would it do that? Well, if you think about it, what's here? Sell stops. So anyone that's long, they have a sell stop here. And then people that still have sell stops here from the AM session on Friday, they're feeling real good when the market trades down, stops just short of it, and shoots higher. Because now that's what? Support or a double bottom. Smart money's selling into this here. And then they're going to aggressively run for those stops before they can pull those orders. Again, think about it. When you see the market trading towards your stop, you start getting more uncomfortable. And many times you want to do what? Take the trade off. So to avoid those traders, or not to avoid, rather, to prevent those traders from taking off their stop loss, it's going to aggressively trade down and snap into those orders for smart money to distribute the positions that they're accumulating up here. So this is the expansion phase, and this is why it aggressively nosedives down into these discount targets here. And did not look at the PM session today. As I said, once I got my setup, I was done for the day, but we'll take a look at it here briefly. We have the lunch hour from 11:30 to 1:30. So 1:30 starts the PM session, lunch hour consolidation, which is what we expect. At 1:30, you want to think of 1:30 like 9:30 for the morning session. 9:30, that's when we expect the manipulation, the Judas, and that's the same thing we get here in the PM session, right? It's always time and price. What's the bias? Well, we still have these equal lows here, here, and here, right? So the market's going to want to draw into that for the PM session. So again, if we're bearish, my protocols are very simple. Same thing with the morning session. If I'm looking for lower prices, it needs to do one of two things. Trade higher into buy stops or trade higher into a premium inefficiency. What do we get here at 1:30? Trades higher into the buy stops formed during the lunch hour. So if you're trading the PM session, you always want to reference your liquidity that forms during the lunch hour. Takes the buy side that forms during lunch and then offsets, distributes it to sell side here, and then stops at the midpoint of that wick. So if you look at the short I was taking this morning, that's why I took a profit there inside that wick, because many times if it won't take out that low, it'll stop at the wick midpoint. So I usually like to get something off there, and it's close enough to the low for me to want to scale off a partial, and that's where it stopped, making the low of the day at 3 to 4, time and price, when we expect the low to be made, and then from there it pulls back into the range. Really clean market structure here for the PM session. Original consolidation, market being sent higher, clearing out the buy side here and here. Anyone that has their stop from the morning session, that knocks them out. From there, we get a breakdown, shifting market structure, fair value gap, aiming for the liquidity that forms in the lunch hour here, and then aiming for a low of day, which it wouldn't have given you that exit, which is again why we always want to take partials at levels that make sense and never demand the best case target, right? No matter how good these equal lows here, here, and here look, there's never a guarantee the market has to trade down into that. And I got burned a lot doing that early on. Like I'd get a beautiful entry from here and not take partials on the way, expecting the lows because it's so obvious. It has to trade down there, right? But many times it won't do that. So that's why you always want to pay the trader at levels that make sense. Hope this one was helpful. Thanks for watching. See you on the next one.